Good evening. There is another update on solar industries. It backs another export order worth 239 crores. The company needs to complete this contract in the period of 1 year. It's a multi-mode hand granite for Ministry of Defense. It's a local order. It's not an export order. I'm sorry. Got a little bit confused. The previous order that the company had got was an export order. That was about 2 3 days ago, and that was amounting to a value of 2,150 crores. That was to be completed over a period of 6 years. Another update about a company's subsidiary, the Economic Explosive Limited. Got an order from the Ministry of Defense on the 6th of February that was worth 6,084 crores, which is a large sum of money. And this is another update on the EEL. They've got into a MOU, that is a memorandum of understanding, with the government of Maharashtra on the 22nd of January. As per the MOU, the company would develop anchor mega defense and an aerospace project to be set up in Nagpur. The proposed investment of the project is 12,700 crores, involves expansion of certain defense products such as drones and UAVs, counter drone systems, energetic materials, new generation explosive, etc., and new products such as military transport aircraft. The government of Maharashtra will facilitate and obtain the necessary permissions, registrations, approvals, and uh, uh, physical incentives from the concerned departments of the state as per the existing policies, rules, and regulations of the government of Maharashtra for the proposed project. This MOU and the investment will range from a long-term growth and would build at least 4 times the sales value over a period of 5 to 10 years. This will improve India's defense exports and add to India's growth story. So the IPO of this company was listed on the 3rd of April 2006. Listing price was 219. Size was 83.6 crores, and it was for a share of 190 per share. And the stock has rallied 300% in the last 3 years and 700% in the last 5 years. The order book here is a total of 5,757 crores as of December 2024. This includes the 2,039 crore supply for defense products to be delivered over a period of 4 years. So if you add another uh, 2,150 crores and another 239 crores, that is about 2,400 crores, so making a total order book of 8,000 crores, which some part of it has to be delivered over a period of 4 to 6 years, and the rest probably in the next 2 years. So this is something that is wanted to highlight this across. The market leadership, the company is one of the largest manufacturers and exporters of explosives and initiating systems with around 24% market share. It is India's first private sector company to set up an integrated facility for defense products like high energy materials and propellants for rockets, warheads, and rockets. Operational efficiency, the company produces most of its raw materials in-house, including detonators, components, emulsifiers, sodium nitrate, and calcium nitrate. This resulting in cost savings, enhanced quality control, and stable operating margins of 19% during FY22 FY23, which rose to 24% in FY24 due to an increased focus on the defense sector and a decline in the raw material costs. The strength of the company is good revenue growth, 32.88% in the last 3 years, a good profit growth of 28.2% in the last 5 years. Company has good return on equity, track record of 30.8% in the last 3 years. Company has been maintaining healthy ROE of 26.05 in the past 3 years. Company has been maintaining healthy ROC of 31% in the last 3 years. Healthy interest coverage ratio of 28.5. In fact, is very good. The company has an efficient cash conversion cycle of 63 days. Has a healthy liquidity position of uh, 2.5 as the current ratio. Stock is trading at 20 times its book value. That is the major disadvantage that I can see here. Debtor days have increased from 44 to 51 in the last 1 year. Inventory days have also increased from 92 to 97. Days payable have also increased from 41 to 63 in the last 1 year. So it's taking longer for the company to pay its suppliers, which is why this is something that the company would need to keep a track on. It has a PE of 70.2. This is highly very expensive and highly overvalued stock. Book value is 419, 20 times its book value. uh, Return on equity 32.5. Sales growth, Solar Industries has reported, this is what we've gone through. Promoter shareholding 73%, public 6.8, FII 7, and DII is 13. ROA, you can see it's 18%, current ratio of 2.21, quick ratio 2.21, and current ratio of 1.77. Total EPS TTM for the last 12 months is 83.49. Inventory turnover ratio is 5, interest cover ratio is 28. We've been through that. Long-term debt is in range of 0.06 to 0.017. So ideally, the total debt to equity is 0.13. Asset turnover ratio 1.13. Cash 65 crores, debt 312 crores, market cap of 78,800 crores. Solar Industries is one of the largest domestic manufacturers of bulk and uh, cartridge explosives, detonators, detonating cords, uh, and components which find applications in the mining infrastructure and construction industries. Company manufactures high-end explosive delivery systems, ammunition, filling, and pyros fuses for the defense sector. Product segments: industrial explosive, defense products, domestic explosive quantity. So something that y'all can look into further if you want to get a more decent idea on in the competition that the company may have. Exports is 41% is grown up, housing and infra 16, defense 15. So defense for now is the major uh, focus that the company is looking at, so which is a good sign. Manufacturing capabilities: the company operates in 39 manufacturing facilities across 8 countries, including India, Zambia, Ghana, Nigeria, Turkey, South Africa, Tanzania, Indonesia. Capex: the company is setting up 2 plants in Thailand and Australia. This is to be completed by FY25. It spends about 1,200 crores on the Capex in FY25. We've discussed about the MOU, the Mega Defense and Aerospace project in Nagpur, so it's just more or less the same. Accounting of the hyperinflationary economies, the company has applied AS29 accounting principle of hyperinflationary economies to its subsidiaries in Turkey, Ghana, Zimbabwe, restating non-monetary assets, equity and profit and loss using the respective economies consumer indices. The restatement resulted in 27 crore expense in uh, H1 FY25 and 112 crores in FY24. The company projects defense product sales to reach 1500 crores, contributing to 20% of its total revenue in FY25. So this is done with the write-up. Some of it was already shared in the last 2-3 days. Some views that you can have a look. This is like -7% in the last one, 20% down in the last 6 months, year to date 11%. You've been through the details of the company, market leadership, defense products. We've been through all this. Uh, Something that you can read through if you wish to do so later. The order book, manufacturing capabilities, capex, accounting for hyperinflation in economies. So focus again was on defense products. So you can see the face value is 2 rupees, ROCE 32, ROE 30.9, book value 419, stock PE 71, highest of 13,300, a low of 6,900, uh, market cap 79,825. This is one of the logos of the company. Another logo, another logo. This is one of the subsidiaries of the company. Some more information, minus 10% sales growth in the last 1 year. So this is something that the company is focusing on. I think it's able to generate more business with the kind of orders it's received. So it should be able to improve the sales in the next quarter, and by the end of FY25 you will see a variation here. So then promoter holding remains at 73%. Cash debt, we've been through the high of 12,346 on 10th of July last year. Then a volume volatility of 1,000, the highest being on the 20th of February. So something has mostly been under that 1,000 mark in the last 1 year. A stock P of 187 on 10th of June, which is the highest peak point here. uh, Price to book value of 40, which is the highest during the year on July 10th. You can look at the uh, market capitalization of Pidilite, SRF, Gujarat Fluorochemical, Godrej, Deepak Nitrate, Himadri Specialities, and Tata Chemicals. I think Tata Chemicals is possibly the lowest price to book value with a market cap of 19,686 crores, something that could be looked into for further details. Price to earnings ratio, you can see Godrej 355, which is very high. Solar Industries 105, Pidilite 67, SRF 69. Tata Chemicals, I think, is the lowest at 30.5. So something that you can look into. uh, Price value is also not very high. If it's just 1.05 to its book value, that means the company commands not a very high price, a very good decent price. However, the earnings of the company may be a little bit low. 31 is something still considered to be on the higher side. Looking at the other aspects, the ROE for the company is 5 for Tata Chemicals, which is pretty low. EPS is 25. You can see the other companies, Pidilite and Himadri and SRF, give up a decent return on equity. EPS again, Gujarat Fluorochemical, very good. Again, we'll have to compare the value of the share versus the uh, earnings per share that the company is able to generate. So that is something that we need to look into. Overall, another thing that we need to also keep in mind is uh, the ROC. Again, ROC Himadri 19, Deepak Nitrite 20, then SRF 15, Pidilite 32. So something that can keep a track. Return on capital employed seems to be good. overall maybe need to focus more on the financials and the kind of revenue those companies are able to generate, sales growth, profit growth, return on equity, return on capital employed, debt to equity, price to cash flow is very high. This is very something that is unacceptable, or maybe something uh, because it's highly priced. That is the reason why this cash flow is too much. Though if you look at it from a stable business point of view, it has a relatively stable business, and business has grown in the last 2 3 years. Interest coverage ratio very good. Operations, operating cash flows and efficiency of the business is very well done. So it's excellent. We've been through all of this. You can read through if you wish to. We've been through all of that. However, limitations, contingent liability of 790 crores, trading at a high PE of 105. So I think this has changed. It's 71 now. So this report was generated uh, earlier sometime, which is the reason why it is showing such a high value. Companies trading at 71 times EBITDA. Okay, I think this is some comparison between quarters. Slight increase in sales in the last quarter. Overall, the net profit hasn't gone too much beyond. It's just a little bit over uh, 10% growth in the last quarter. So overall, if you see the last 9 months, 90 crores increased over 240, so nearly 33-35% increase uh, in value. So this is something that will help the company perform better, and I'm sure that in the next 2 3 months you will see the value of the stock start going up again. uh, it hasn't lost too much value in the last 6 months, so definitely there would be some momentum that it start gaining again with the amount of business that the companies started receiving. So now net profit, you can see EPS has increased in the last year, the last 12 months. So this is going to be adding some more positive news if the FY25 last quarter ends up with a good result. So some more things you all want to have a look at. Possibly return on equity, compounded profit growth, and stock CAGR, sales growth. So you will see there will be some variation. There will be some good things, some bad things. But I can see something only good here, nothing bad as such, which will be the overall differentiator in the stock momentum of this stock. Uh, Reserves, again, the last 6 months the reserves have grown. Borrowings have been relatively steady. Total liabilities have increased, but that is not a cause to worry because the business is able to generate good amount of return, and it's basically done some capex expansion, which is the reason why the liabilities have increased. So we've been through some of these, some minor increase over the last 18 months. However, we'll have to review this at the end of FY25. Uh, so cash conversion 84, working capital is slightly increased. This is just for your reference again. Uh, Only 0.55% of the shares have been pledged by the promoters, so it's a good sign. Dividend has been consistent year on year. It's been on the increasing trend, so which is a very good sign again. Though the valuation of the company is high and the dividend payment really wouldn't make much of a difference because of the valuation. If it is bought at a very high valuation, this is something that can be ignored because it really won't make any difference to your overall value. Overall, uh, you can see these are the different shareholders that are owned by the promoters: 6%, 23%, 38%, 3%, 1%. So these are some of the direct institutional investors who are invested in the company. HDFC Kotak Emerging Equity Scheme, SBI Equity Hybrid Fund, HDFC Mutual Fund, some other funds as well. Maybe we can dig deeper and find out more information on that. So stay put. Thank you for watching. Wish you all the very best and hope to see you with another video very soon, probably tomorrow itself. Thank you. Have a great week ahead. Take care. Bye.